André, thank you so much for joining us here at IMpower. It's great to see you.
Thank you, Emma, for having me.
Now, congratulations on the recent publication of An Alternative Future in the Making, the title of your most recent research on European alternatives. It was published only a few weeks ago, I think. So what does the future look like for you in terms of that alternatives and specifically private asset space?
Okay. Maybe let's put a few figures behind what we are talking about at the moment. So Cerulli Associates estimates the private market, the global private market assets under management to stand at just over $8 trillion at the moment. That's up from 3 trillion just 10 years ago. 5 trillion of the 8 trillion is from private equity. In Europe, those numbers are at, I think it's about just under $2 trillion, up from 900 billion in 2015. Now, 90% or over 90% is coming from institutional investors, and high net worth, mass affluent and retail investors are only a very small proportion of that. But we see that changing. We have had a banking and a private banking and wealth management survey conducted. Now, I think it's the 5th or even 7th year in this report you just mentioned, and 50% of respondents said that they will increase allocations to private market and especially private equity over the next year or two. When we speak to GPs, they say that one of their major focus for distribution is family offices and ultra high net worth, but also high net worth individuals. And when we get approached by clients, they talk about this as well. So this specific segment of the market is about to grow, and overall the market is going to grow because institutions are going to allocate to private markets increasingly.
So very interesting times and evolving times there. What do private market allocations look like for individual investors, and what are the preferred products and strategies at the moment?
Yeah, let's look at maybe individual investors. And for individual investors, it's like family offices and ultra high net worth where we see the highest allocations, increasingly high net worth as well. Now, when we look at the product side, we see least demand and least allocations by individual investors for private debt. So not much allocated to private debt. Highest allocations we see in private equity and real estate, where the majority of respondents said they are going to allocate at least 1 to 5%, some even up to 10%. Now, infrastructure is somewhere in between private debt and private equity and real estate. We see some allocations, but not that many. What we can see is that allocations throughout private markets for individual investors are increasing, recommended allocations, and they are also broadening. So it's moving away from just like a few asset classes within private markets, and it's broadening.
So a look towards alternatives. In terms of that space, how much of an impact is ESG making, and what are you seeing there in terms of private markets?
ESG and especially sustainability is becoming increasingly important in that space. So we have seen that 25%, I think it was, of respondents, they said that they would not allocate any assets to to Article 6 funds. Sorry. So that's quite. It's 25% is not that much, but it's quite a statement. 80% said that ESG integration in private market assets is really, really important, and 85% said that there is moderate to high demand for Article 9 funds. So that's very interesting to see. So it plays an even a bigger and bigger role, even in the individual investor space for private markets.
Indeed, it's very high on the agenda at this conference, isn't it?
Yeah, I know.
So it's watch this space, isn't it?
Yeah.
So I mean, what's the right vehicle and product for those individual investors then that are looking to invest in this way now? What's your advice? Just
it's a very, very good question, and it's actually in this report you have mentioned we dedicate a whole section to that topic. We see most demand and most growth in open-ended semi-liquid structures. So that's across Europe where we see most growth. In Italy and in France, we see high demand for LTIFs. Now, in Italy, that's not that surprising because they have just like had tax relief for investments in LTIFs. The market is still quite small. Yeah, I think it's 57 LTIFs across Europe since 2015, so not that much, 2.5 billion assets under management. But with the current review of the LTIF regime, and once this is like decided on, then I think there's going to be change. I think one interesting feature is the cross-border aspect of LTIF. So we see that grow for sure, and we see a lot of activity with our clients. Now the UK sees as well interest for investment trusts, so that's interesting. That's quite popular here in the UK. And you might ask me, how about LTAFs? LTAFs. So I think it's a bit too early to talk about LTAFs. We first need to see some product launches here, but I think it could be an interesting proposition for the UK. And could be like a good opportunity to position the UK with this product. So watch that space.
André, thank you so much for sharing your insights. Really
Thank
kind
you,
of you to
Emma.
come and join us today at IMpower. Thank you.
Thank you very much, Emma.